And to do that, we have, as always, with us, Dan O'Brien. He's our grain market economist here at K-State. So Dan, thanks for joining us.
Thank you, Samantha.
Absolutely. And Dan, as we always do, let's go ahead and start with those future markets.
Well, tremendous day on the futures yesterday, on Thursday, August the 4th. Again, we've seen a lot of up and down volatility. Turned out that we had moderately strong corn prices, closed at from where we dropped to prior in the week. We closed on the September contract up to 602.25. D's back up above $6 at 606.25, and those were up 10.75 and 10 cents per bushel. The big movement came in the soybean market. August soybean futures, again, now they're in the delivery time period of that. So, but it was at $16.15, up 57 cents. The September contract, which we've rolled over to largely now for determining cash price basis, once August got into delivery, closed at 14.61. That was also up 57.5 cents. Wheat has had a strong day also, up. September closed at $8.60, 60.25, up 24.75. D's 868.24 and a fourth. So the big news in the market has to do with weather on the one hand. Blocking high pressure system, kind of symptomatic of a La Nina weather year that's really affecting the availability of moisture, temperatures, and moisture in the Western Corn Belt in particular, and parts of Iowa, all coming into play. So the market is of two minds. It's trying to determine how much damage is in the West and how optimistic they are in the East, and trying to figure out where the center goes also. So that's an ongoing issue for corn. That's forecast for really pretty hot and dry conditions, at least by the weather maps that I'm looking at out of the National Weather Service, showing for a fair amount of August. Yeah, we'll have some sporadic moisture, but generally hot and dry. We're coming into August, and for soybean markets, you have some worry of August hot and dry conditions now coming in and affecting soybean futures, and that's part of what had brought that 57-cent run on the front, up to the high side yesterday in these markets. The other part has to do with reports out of Argentina that as an inflation hedge in a really roiling, upset economy, which in Argentina seems to happen about once every decade or so, or two, that farmers, instead of selling soybeans, are holding that back as an asset or capital for an inflation hedge. So to the degree that those Argentine farmers are holding their soybeans off the market, then that tightens things up and in terms of world trade, and eventually sends people back to the U.S. I think it's good to remember that right now the crop out of Brazil either has come out of the field or will be coming shortly. And Brazil will have strong exportable supplies, and so they're in front of us at this time. But there'll come a time, probably out into September, largely thought, when their exportable supplies are pretty well used up, and the world will have to come to the U.S. So that really, I guess, brings to bear the idea of what our cash markets will do in response once we come into harvest.
Sure. And speaking of those cash markets, I know last week we talked about some strength in the Southeast, and we're seeing that again this week. Is that right?
Especially in corn. So we've got kind of a tale of four major markets that we're watching on the cash side. And I really think anymore, if we want to get the pulse of these markets locally, yes, we're watching futures, and that's affecting us. But we see what grain elevators locally are doing with basis. It really gives us a real, I guess, probably the best picture of how much demand pull there is coming out the countryside. On the corn side, generally the strong run up that we've seen in corn basis over the last month and a half has pretty much maintained in most areas of the state. fallen off just a little bit, still very strong in the Northeast. In the Southeast, it's the only part of the state, at least amongst these major markets that we're watching. Again, Colby, Salina, Topeka, Garden City, Hutchinson, Columbus. Columbus, the Southeast area, is the only part of the state where the basis has actually gotten narrower yet, got stronger yet. So that's still in play. On the grain sorghum side, we haven't seen any weakness in basis, and that's consistent with this ongoing march in pretty decent grain sorghum export numbers. Some up and downs to be sure, but no weakness. But again, the strongest move in grain sorghum basis in the state has happened again in Southeast Kansas. So you've got some of that demand pull coming out of the Southeast as livestock feeders are trying to pull in what supplies they can, and pretty dry conditions, not the best conditions in parts of that world. I would say for soybeans, for as strong as corn has been, if anything, in the last few weeks, soybeans has been stronger in terms of basis, but it's really been bouncing around. I think affected here of late by what we were just talking about earlier for the soybean market. Really highs set since 2018. I say highs in terms of the narrowest basis levels set in the Colby area is slightly the highest, higher than last year, earlier, that happened earlier in the marketing year. Highest in Salina, highest in the Topeka area, definitely highest in Columbus, highest in Hutchinson, pretty strong in Garden City. Again, Garden City is more of a feed grain area. They do grow some soybeans, but even there, they have pretty strong basis. So strong moves. And if you look at on the export side, we have a good amount of soybeans bought ahead for delivery nationally into the next market year. So perhaps these elevators are getting ready for what they anticipate to be a pretty strong demand pull once we actually get a harvestable grain. Of course, the current basis, if you're trying to pull in anything they have right now, and we'll see where that goes later. And we have pretty strong, pretty healthy biodiesel demand or renewable diesel coming out of soybeans. So that's probably at play too. Should mention on wheat, we've got decent basis. We have, I guess, for wheat after we've had the harvest that we've had and the things that we're wondering about. When you look at wheat basis levels, you do see some improvement that's been happening in the Colby area. Recent improvement down in Hugoton. Steady, really pretty steady in Salina, Hutchinson. Pretty steady in Topeka, Columbus. So if anything, stronger basis moves, relatively speaking, been happening in the western part of the state. So just interesting to watch. And you pull all that together, and we still have wheat cash prices ranging across the state at these major locations, running from $7.85 in the southeast, widest basis, everything else above $8, ranging up to about $8.45 on the high side in Salina and Hutchinson. And corn cash prices, a lot of variability. In Garden City at $7.72, Colby $7.42, and Southeast Kansas $7.67, almost as high as Garden City, and other decent prices as well. So lots to watch, I guess, in these markets, and I think it really sets us up for ongoing volatility for the month of August, as we see this weather play out, we see these uncertainties on the world market play out. And when we get to this time of the year, Samantha, so often we're wondering, well, do we start now this slow slide down into harvest? With prices anticipating larger supplies coming on and a weakening at that time. So I think in almost every situation we'd expect that, unless say for corn, the damage from all the weather extremes that we faced this summer end up and give us a corn crop of 14 billion or something less than that, and then you probably find yourself in a short crop situation where you have very strong basis as people scramble to get hold of anything that's available, And again, you get an inverted market where we're showing things pretty strong on the front side. So am I predicting that? No, but that risk is out there with these uncertainties we have in crop size. So just very interesting time to be looking at. We still have risk of the downside, and I think you and I have talked about this. Some of our biggest risk has to do with overall financial markets as impacts of worries, pessimism, whatever, come out of those markets and affect the commodities. And then you see that bleed over, kind of wash over into the grains and have some downward effect on those too.
You know, it's interesting. You talk about kind of that consumer index that we talk about a lot, but I guess the farmers index, there's a similar one just for farmer outlooks, producer outlooks as well. And I saw that was recently up in July. So
Yeah, was that the one out of Purdue that
I'm not sure.
I think there's one out of Purdue that yes, it gives a farmer's optimism or pessimism, and interesting to hear that it's optimistic. Of course, it's probably more optimistic in Indiana where they've gotten some rain than it is right now in Kansas where we haven't gotten so much. That'd be my only caveat of that. But I don't think anybody's pessimistic about prices. On our side, we'd wonder about having the quantity of crops to sell into these markets.
Sure, the supply to back up that demand for sure. And with all things considered, you know, we mentioned the volatility of this market, but that cash market, not too bad where we're currently sitting. But as you mentioned, going into the rest of the month, that may change. So something to look out for sure. And you mentioned earlier, you know, that guess of under 14 billion bushels potentially for corn. And in terms of some private forecasts that you've been looking at, is that kind of what they're showing?
Well, on the corn side, whereas the USDA had projected a U.S. average corn price of 177 bushels per acre, there's some independent analysts projecting about 174. Interestingly, there was a farm futures survey that came out not that long ago where they asked farmers online what they thought they'd have, and they were a little more optimistic than the 174, say 175, 176. And I think I don't want to belittle anyone. I think if you're growing the crop, you're always hoping for the best, and you're not going to declare it really poor until you actually have to. So I think there's some natural leanings there in those numbers. But one thing that's consistent is that I guess it'd be really surprising if we actually ended up with what the USDA is projecting right now, and at 177. It seems that we're heading either optimistic or pessimistic views at 1, 2, 3, 4, 5 bushels lower than that, and that takes us off of 14.5 billion bushels down closer to 14, and then we start to really wrestle with just how tight we'll allow ending stocks to get, what prices we have to go to ration things out.
Sure. Well, things to look out for sure as the month goes on and we enter into these fall harvest months. But Dan, as always, thank you so much for your time.
Thanks, Samantha. Take care.
You as well. Once again, that was Dan O'Brien. He's a grain market economist here at K-State covering our grain outlooks. We'll be back with more ahead on Agriculture Today.